This is the Mooncast. Welcome to another episode of the Mooncast. So I don't want to waste any of your time, so let's just jump right into it. So as you guys may know already, the ETFs have been approved. So I just want to break down basically everything that was leading up a little bit before the ETFs got approved, to then talk about the significance of the ETFs getting approved, because I think people don't really understand the impact of what this actually means in the long term and in the short and medium term. And I also want to talk about why this is significant for Bitcoin network and the Bitcoin ecosystem, which a lot of people don't really even know about or aren't even thinking that far ahead about. So let's just first talk about Vanguard, right? So they said that the spot Bitcoin ETFs won't be available on their brokerage account, right? Or their platform. Why is that significant, right? So it's significant because Vanguard is one of I think they have about $7.7 trillion in assets under management, right? Huge, right? And they're going to be left out of the beginning stages of this party. And I think that they're missing out on a lot of money in the long term, because there's quite a lot of demand, as you guys are going to see as this podcast continues. And I'll break that down in regards to how much demand there was in the first 24 hours of the spot Bitcoin ETF. And I think that there will be a growing demand for their clients specifically that will probably ask about why they don't have Bitcoin as an ETF. And it's not purchasable for them on their platform. But anyways, a statement from a spokesperson, right, for Vanguard said, while we continuously evaluate our brokerage offer and evaluate new product entries to the market, spot Bitcoin ETFs will not be available for purchase on the Vanguard platform, right? This was said on January 11th in an email, adding that Vanguard has no plans to offer Vanguard Bitcoin ETFs or other crypto-related products. Our perspective is that these products do not align with our offer focused on asset classes such as equities, bonds, and cash, which Vanguard views as the building blocks of a well-balanced long-term investment portfolio, right? And yeah, so I was close to what I said about the assets under management. So they have around 8.2 trillion in assets under management. So again, they're one of the largest wealth funds in the entire world, right? And so for me, it's quite strange that they wouldn't want to be a part of this. And they say specifically that they think that they're focused on well-balanced portfolios, right? So in my opinion, as an investor and a forward thinker, wouldn't you want just a fraction of a percent added into your balance sheets as a form of diversification, just in case this thing blows off and it does become, which it's obvious that it will become, one of the biggest market, one of the biggest vehicles, I would say, Bitcoin will become. You know, I think it's going to become a global reserve currency option. I think it's going to become the biggest sort of peer-to-peer payment network in the entire world. And this is what I think. This is where I think things are going. You know, I think it would behoove them to at least get a fraction of a percent from their balance sheet into this asset. But we'll see if they pivot later on, as most of these institutions have, after talking so much mess about Bitcoin in the past, for the past, 5, 6, 7 years, to finally flip the switch to understand what this asset is and actually take the time to learn a little bit about the asset. They are pretty late, as they're just now getting in, and Bitcoin's 45K. And they could have gotten in a lot earlier. Grayscale's been in Bitcoin since 2013. They have about, I think, 619,000 Bitcoin currently right now, right? And so a lot of these other institutions were a little bit late to the party, and they're buying our bags, because if you've been following this podcast, since I started it last year in February, I've been telling you guys to buy since Bitcoin was 17K, right? And so for those who were, those who are just coming out now and, just now listening to this podcast, you know that I've been an advocate for buying low and selling high, or not selling at all, or borrowing against. There's different sort of alternatives that you can do, which actually leads to a good segue to talk about a little bit of the significance of this ETF, right? So one of the things I think is going to happen, right, this is just me speculating, is that there'll come a time where the liquidity pool gets big enough with the people buying. The buying pressure gets so high, and then the asset goes exponential in regards to price appreciation, to a point where people will want to borrow against that asset, right? To get new liquidity. And the ETF providers will be incentivized to do this because it would be another revenue stream for them, right? So if you could take your Bitcoin, give it to BlackRock would then give you access to liquidity. You don't have to sell your Bitcoin, and you're paying a very favorable rate in terms of interest rates. Well, that acts as another monetization vehicle for BlackRock, right? And also all the other ETF providers. So why would they not want to do something like that, right? So it's another thing to really keep in mind, right? When thinking about the significance of the ETFs, right? We're going to continue to talk about this moving forward, but let's just go ahead and move on to the next piece of news, right? So Jamie Dimon, he said that he insists Bitcoin doesn't have value as JP Morgan teams up with BlackRock on spot Bitcoin ETF. So this is so contradicting. Again, this is what they do. They try to manipulate the market to push the price down so they can buy cheaper, right? And that is the game, right? It's all psychology. 99.9% of the markets is driven by psychology and FOMO, right? It's important for you as an investor to control your mind, right? Control your mind. If you are in control of your mind, if you're calm, if you're patient, if you do your due diligence and do your research, you'll do just fine in investing in the long term. Short term is a completely different thing. I don't agree with short-term trading. That's just not how I play the game, and I don't recommend to do that for my clients and the clients that I help invest for. I do not do short-term trading, right? The reason is because you're playing against people who have an army of people with 2 to 3 screens staring at charts and better data than you, and also have the access to artificial intelligence as well to help predict and have better indicators to basically have a higher probability of winning, and you don't have these sort of tools, right? I'm not saying you can't win in trading, and also the most important thing is time. You have to have a significant amount of time, so you have to be doing it full time, I think, if you want to be a real trader, right? You need to be able to understand charts better than your competitor. And that's trading in a nutshell in the short term. So this is why I don't do it. But yeah, so again, another form of market manipulation that they attempted to do, which made absolutely no sense. And it's so blatant, it's just funny at this point that you can be an active participant in the spot Bitcoin ETF and at the same time say that Bitcoin has no value. Why would you fudge your own bags if only then that you want people then to sell their bags, and then so you can buy them back at a lower price and you get a better entry, right? It makes absolutely no sense to me. If you guys have any other conclusion, then you can please comment in this video and let me know what your perspective is on that specifically. And moving on to the next piece of news. So another thing that happened too as well before the ETFs got approved is that the SEC did announce that the ETFs would get approved, right? And it ended up being a false alarm, and they said that their Twitter was hacked. So for me, it was kind of strange because the whole situation was just weird, right? So here you see here, this post, it says today the SEC grants approval for Bitcoin ETFs for listings on all registered national securities exchanges. The approved Bitcoin ETFs will be subject to ongoing surveillance and compliance measures to ensure continued investor protection, right? And yeah, it says here, Gary Gensler, today's approval enhances market transparency and provides investors with efficient access to digital asset investments within a regulated framework. And Bitcoin immediately shot up like 1,000 or 2,000, something like that, in price, right? To later find out that actually their Twitter account was compromised, right? And that was from the official Twitter account from Gary Gensler, which the whole thing for me was just weird. And it said it was an unauthorized tweet by some underling within the SEC, and it just screamed market manipulation in my eyes. And I think that they wanted to FUD the market and actually bring the price down a lot lower than it actually went. But as you know, about 70% of holder bases of Bitcoin are holding long term and they don't sell. So that's also another thing too to take into account, is just not enough Bitcoin to buy, right? 70% is holding. Then you have the Bitcoin that's lost, right, in circulation too as well, that people don't really look and take into account. And the amount that's held on exchanges is very, very small. I think it's roughly around like 2 million that's held on exchanges, right, for people to buy. So you need to keep these things in mind with these big institutions trying to manipulate the market, so to FUD you out of your bag, so you don't they're trying to shake out the weak hands, right? And that's the name of the game. So that way, if they've missed out on something, they can get in earlier than you, or at a better price than what they would have gotten into. And that's just the name of the game. And so another thing I wanted to bring into people's attention to as well is the fee structure, right, for all of the ETF participants, right? So when you look at BlackRock versus Grayscale versus Fidelity and VanEck and LinkTree and et cetera, they have different fee structures, right? And so I had a theory, right? And if you look, BlackRock is 25 basis points, right? And then you see here it's 150 basis points for Grayscale, right? And then 39 basis points here for Fidelity. So outside of the fees, how else can they compete to differentiate themselves from one ETF to another other than the branding and the marketing, right? So here's a couple things that I think will happen. I think one, the marketing is going to ramp up exponentially for these ETFs as they all try to compete for market share, right? Which is great because it just is going to create more exposure for Bitcoin, right? And when there's more exposure for Bitcoin, then that's awesome, because that means that more and more people will be aware, and when more and more people are aware, they'll be more enticed to want to maybe allocate a few percent of their portfolio into Bitcoin or into the Bitcoin ETF. And when it's easily accessible, it makes it all the more convenient to then want to allocate a few percent into the asset, right? Which is backed to the actual real Bitcoin, right? And so it would be interesting to see. This is actually something I'm going to actually, when we look at, I made an actual LinkedIn post, right? So we're going to look at this LinkedIn post that I wrote, right? And here's what I said. I said 3 things that are bothering me about the Bitcoin ETF situation, right? So one was, how does one, air quotations, the SEC, get hacked and get their account back so fast? Crazy. That was another thing that was a red flag for me, that it was market manipulation, because how were they able to get hacked and then get their account, access to their account so quickly? Super, super weird. Then another thing too as well, another thing I was worried about was, will the ETF fee war affect the centralized exchanges, right? Will they have to drop their fees to stay competitive, right? And that is a question that will be answered over the course of time, right? To see how these centralized exchanges are going to stay competitive. If people just only want Bitcoin, why then would I pay, a 2% fee, a 3% fee, like a Coinbase or another one of these exchanges, when I can just get it from BlackRock at 25 basis points, right? And so I think the fees ultimately will have to drop significantly from majority of crypto centralized exchanges, right? So they can just stay competitive. And the third thing too as well is, if the fees are going to be around 25 basis points, does that mean they are expecting more than 10 billion inflows on the monthly, right? Because that's not that much money, right? So what is the point to go through all this hassle to share the pie of 10 billion anticipated in the first 30 days and others are on a 25 basis point margin, right? The $25 million split between all these guys on the monthly estimated, it's chump change, right? So my only conclusion is they are anticipating higher liquidity inflows than what we anticipated based off previous data, i.e. the gold ETF, right? And so, yeah, if you guys aren't following me on LinkedIn, you should definitely go ahead and do that too as well. I don't like Twitter. Twitter is a little bit for degenerates. I think LinkedIn is way more of a professional environment, and I really like their platform a lot. It's nothing but value exchange and high level of value, right, on the platform. So that's basically what I put on LinkedIn. And yeah, let me know you guys' thoughts on that specifically too as well. But this is kind of how I'm looking at it, is there's no way that BlackRock will lower their fees that low unless they know that there's way higher demand than what we're anticipating throughout the course of this year. Maybe we may start at 10 billion in terms of monthly estimated volume, right? And that number will then increase 10x within the next couple of years, right? So that makes it a little bit more lucrative, I guess. And then maybe they think over the course of time it will 10x again, So we'll see exactly how this affects the entire landscape of how the businesses shift their fees, and also to see how profitable this whole situation actually is for, the BlackRocks, the Fidelities, the Van Ex, the WisdomTrees, and so on, right? Now, moving forward, so another thing too as well that it was crazy was that Bitcoin hit $1.74 billion in volume. The Bitcoin ETFs did in the first hour, right? And so this is pretty huge, right? It means that it's showcasing, because you can quantify then the demand, right? And this is just on the first hour, right? So quantifiable metrics showcasing how large the demand was within the first hour leads me to believe that the liquidity inflows that we may see this bull run may be higher than what we anticipated within our research group, right? So at least me in particular, I was anticipating anywhere from $120,000 to $160,000 Bitcoin, right? I may need to move my ranges or my targets upwards more so to 200,000, right? Depending on what we see after the halving and the liquidity cycles officially changing when the Federal Reserve decides to reverse its course in terms of rate hikes, right? So that should come sometime from the summer to Q3-ish time frame this year. So we'll see what's up with that. And yeah, I'll continue to keep you guys updated, right? So just to let you guys know, I'm extremely busy currently right now, so I can't really do these types of singular podcasts as much as I would like to, as often, giving you guys the latest and greatest updates in my perspective on how the market will go and what you can anticipate, breaking down areas where you can potentially get a suitable investment and take advantage of things before people realize what they actually are. And so, yeah, I'm building a project right now in London. It's just like I said, it's a little bit busy, but I am trying to get you guys periodic podcasts. And as I told you, I don't miss any weeks, but the following weeks may just be me interviewing other guests as well. So just keep that in mind. But this podcast, I hope, will provide a lot of value and insight and give you a different level of perspective to know how you can deploy your capital and where you should deploy your capital to in the upcoming months, so you're positioned properly for this upcoming bull market, right? So when we go on and we move on, so Bukele trolls on Twitter and says, so we got in way before BlackRock, right? And this guy, he's for me, he's the greatest, if not the greatest, or one of the greatest leaders in the entire world currently right now. He was able to literally flip the script on his country, rebrand it, remarket it, make it safe, entice foreign direct investment, all within a 12 to 24 month time span, right? It's ridiculous what he was able to do. And he's profitable. Now El Salvador is profitable, and the more profitable he becomes, the more it puts pressure and creates, again, FOMO for these countries also to then get an allocation into the asset class or start maybe investing in mining, figure out ways to participate in the network over the course of time, maybe also make it legal tender, because they're going to see, especially if you're a poorer country, it gives you another advantage. And this leads you to a next point about the Bitcoin ETFs, right? with the El Salvador being able to have so much Bitcoin, being so much in profit, they can then eventually be able to issue out Bitcoin-backed bonds. Why is this significant, right? Because that makes them a direct competitor to the US dollar bond market, right? Because really there's not so many competitors currently right now that aren't buying US bonds outside of the US bonds, right? Because the reason is the US has never defaulted on its loans, right? And it's the global reserve currency. So why would I buy your shitcoin, air quotations, your Kenyan shilling or your Nigerian naira or your Venezuelan peso or Argentinian peso, as a bond when it's just not trustworthy and we don't know what's going to happen tomorrow with your currency. But how can you then be competitive in the bond market is you could swap your national currency with Bitcoin and buy a bunch of Bitcoin, and that way you can issue out bonds backed by Bitcoin. And that is more attractive and more appealing to the global landscape of countries, right? When they're looking to, dip their hands into these bond markets, right? So I suspect actually in the longer term that we could see an influx of people buying into Bitcoin and then using that as a bond vehicle to create and generate more revenue for themselves, right? Over the course of time. And I think El Salvador was just first, and they're pioneers, and will go down in the history books in the next 10 to 20 years. People will be talking about this move that they've made and how it helped them so much, because people were only talking about the price and how everything went down when Bukele bought, but they weren't talking about how they increased in tourism within that year that they decided to make Bitcoin legal tender. Within that 12-month time span, in tourism increased about 95%, right? Nobody was talking about that. Nobody was talking about the fact that he made the country safe and took care of all the cartel and downsized the government, right? Nobody was talking about the fact that he made taxes 0% for any technological companies and made Bitcoin legal tender, and how that affected the economy as a whole, with people being able to pay their rent through Bitcoin instead of having to drive, because there's a lot of people that don't have bank accounts. Like I think around 60% of the people don't have bank accounts. So you had issues of where people would have to drive way out the way to go to a bank to stand in line to then be able to pay their bills. But now with Bitcoin, they can just send off Bitcoin to their landlords, right? And that's significant because that creates a really good positive trade-off to where you have an excessive amount of time that you don't spend traveling back and forth to pay bills, that you can utilize to either make more money or to do something more productive with your life, right? So something again to keep in mind. And moving forward too as well, at the total volume of the spot Bitcoin ETFs, which eventually didn't get approved after the follow-up message from which was it's just so weird. If you knew that you were going to approve them anyways, like a little bit later, why not just go ahead, even if your Twitter was air quotations hacked, just let it ride, that the announcement happened a little bit earlier. Didn't really make any sense to me other than to manipulate the market so people could buy in lower. And start maybe de-risk the FOMO, because it was a completely weird sort of thing, and I didn't really understand it. But anyways, 4.5 billion total volume on the first day of trading is huge, right? Huge. And so this article, and it also talks about Grayscale being the top performer of the newly listed funds, handling 2.3 billion in volume, nearly 50% of the group's total volume, right? And this is also big too as well, because Grayscale is also a huge competitor again to BlackRock. But remember, they positioned themselves accordingly, and they already had the trust, so they were just able to convert the trust into an actual spot, which was easy to then convince their clients to be able to want to trade, and it was convenient for them, right? And that's why they're probably doing higher fees, which is another thing that I think people didn't really understand specifically about the fees, right? So when we go back to the fees, you can see Grayscale has the highest fee rate, right? Like I think 1.5%, right? And the reason they're able to do that, in my opinion, is because it will be a taxable event for people to then sell and then move it over to another trust or another ETF, right? So they'd rather just leave it in there and stomach the fees, and then they'll probably end up lowering it a little bit later. And I think they know the clients will be okay with that, right? And also the comfortability of just already being in grayscale. People just don't want to leave. So I think they're taking advantage of those two elements to be able to structure their thing with the highest amount of fees. So imagine they got the highest amount of volume and they had the highest amount of fees. So they made the most money for the launch of the Bitcoin ETFs, right? So currently right now they're the winner, right? BlackRock is obviously the most known and notable, but they're the winner right now currently in this ETF battle. I do think in the long term, that there will only be about 2 to 3 actual winners of the ETFs, right? I just don't see a situation where you're going to have 30 different competitors for these ETFs. I think 2 to 3 will grab most of the market share. I'm not entirely sure how it will happen or how they'll be able to do it, but that's just where I see the future going, right? And also Coinbase is a huge winner too as well. So they're the supplier for majority of these ETFs, right? So it would have been lucrative for you to buy Coinbase stock at the lows at the beginning of last year. I think you would have made about a 5x or so, which is really great for a stock. So I think Coinbase is actually going to be a huge, I've already said this in previous podcasts that I think that they were clearing the way for Coinbase to be the market leader in the States specifically. And, chasing out, Binance, as that was the other bigger threat. And then you had also too as well FTX collapse. Kraken is not anywhere near the same level of volume as Coinbase, and so on and so forth. So they have the foothold in the market, and they're doing a lot of the right things. They did everything by the book. They didn't do any shady stuff. So kudos to Coinbase as well. And also kudos to Grayscale, right? And also, you can look here at the number of trades and the amount of volume. You can check it here. You can see the Grayscale and then the BlackRock and then Fidelity as your top 3 in terms of volume. And so I think who's HODL again? I think it's Van Eck, if I'm not mistaken. Might be HODL. I'm not entirely sure, but yeah. So ARK is doing pretty well too as well in terms of the trading volume, but Grayscale is literally blowing everyone by a mile, so that is basically all of the news in regards to the ETFs for this particular segment. So let's move on to the next thing. Another thing too as well, that people this is again another chart that showcases the different levels of amounts of liquidity inflows in terms of trading volume, right? And so we can move on. This is another thing I wanted to show you guys really was the top assets by market cap in the entire world, right? So you have at number 1 gold, number 2 Apple, 3 Microsoft, 4 Saudi Aramco, number 5 Alphabet or Google, number 6 Amazon, number 7 Nvidia, number 8 Silver, number 9 Meta, and guess who is number 10, right? Bitcoin. Bitcoin is number 10. This is actually pretty crazy, right? Now, where Bitcoin is right now, would it be able to catch gold before the end of this decade? I think it would. I actually think by 2030, if you take into account, we have 2 more bull cycles. We have this one, then we have one last one at the top of the decade to go this cycle or this decade. I think it's possible for Bitcoin to do a 20x for where it is right now until the end of this decade. It should be able to do a 20x. Now, a 20x from here would put it at about an $18 trillion market cap, right? Assuming that gold also rises too as well. But maybe what would happen is gold is just rising a bit slower because more people are allocating from their gold portfolio into Bitcoin. This could also happen too as well. And a little bit of the real estate too as well. People selling more real estate to get into Bitcoin because it's just more liquid. It's more flexible. You can borrow against it. You don't have to deal with landlord tenants. It's moving at a compound annual growth rate that's much higher than gold, and much higher than real estate, and much higher than basically any other asset class in the entire world. that could be a potential possibility, and that would put it close to $1 million by the end of this decade. Even if it's just, let's say, like $500,000. I mean, if it gets to even $500,000, that would put it roughly, in the top 3, top 4 asset classes in the entire world, which would be absolutely insane to it as well. So I think people don't understand how big of an asset Bitcoin is currently right now, and how much room it still has left to grow, because you still only have about like 200 million people that use the network, I think, on a regular basis. I mean, that's a small fraction of the entire world. What happens when it gets to 1 billion? It may get to 1 billion this cycle. I'm not entirely sure. That would be crazy. But the users still aren't to the same level of a Facebook or of a Google, right? What happens when the majority of people are using Bitcoin, right? For peer-to-peer payments and for storing their value. I think it's something to really keep in mind, and people really need to pay attention to how big this asset is. It's bigger than majority of currencies in the entire world, right? So another thing to definitely keep in mind that I think people really aren't paying attention to as well. And I think moving forward, it would be just a small fraction of percent. It'd just be, you have no idea where this is going, because we can only speculate and we can use data and we can analyze things. But for me, the writing's on the wall, and it's pretty damn obvious where things are going, right? And another thing too as well that I think people should definitely look at, that I think they're currently not looking at, is the fact that Bitcoin has an ecosystem, right? So here's the thing, right? Institutions are flooding the Bitcoin ETFs and will just continue to buy Bitcoin, right? Once they realize, which I don't think they truly have, that Bitcoin isn't scalable at base layer, they're going to start to put a lot of money and research into layer 2 scaling solutions and the Bitcoin ecosystem itself, right? To help scale it up in a way that is user friendly, and so everyone can be able to at some point be able to use a layer 2, and it's cheap and it's fast, right? Because essentially how layer 2 works, if you don't know, is, first, if you look at the Lightning Network, what ends up happening is you open up a Lightning channel and you basically move your value up to the second layer, and the other person opens up a channel with you, and you're able to transact as much as possible. And then once you guys are done transacting, you close the channel, and then the settlement of the transaction goes back to the Bitcoin layer, right? The layer 1, the base layer. And that's essentially how it works, right? So one of the projects that's basically helping Bitcoin to scale outside of Lightning Network is also is Portal, right? Or no, I'm sorry, not Portal, Mint Layer, right? So Mint Layer, we'll get to Portal in a bit. So Mint Layer, right? I want to show you guys all 3 of these projects, right? Just a little bit, break them down just a little bit so you guys can look at them. Maybe I'll do more of an extensive breakdown at a later point in time when I have time. But essentially, Mint Layer is a future-proof blockchain that improves direct token interoperability and enables ways to travel or to trade value, create systems, functionalities, and participate in truly trustless finance, right? And why do I like Mint Layer, right? I like Mint Layer a lot because they're going to be having atomic swaps, right? If you guys don't know, like if you look at my previous podcast that I did with Enrico, who's the CEO of Mint Layer, they've been working on this atomic swap feature for about 2 years now. So it's going to be dropping at some point this year, and he's anticipating within the next couple months, right? After the mainnet launches on the 29th of January. Why is this significant, right? Because people are going to be able to tokenize assets on this blockchain and swap them seamlessly, natively with Bitcoin, right? And if you don't know what I mean by that, what I mean is you can't swap Bitcoin into an ETH product and an ETH product into Bitcoin, right? So an ETH token, you can't do it. So what this allows you to do is create your own token and be able to swap Bitcoin natively, because the code structuring is different, right? So what you usually have to do is get a derivative of the actual Bitcoin so you can then use it in the ETH network, right? For this particular example. But instead, you'll be able to take your actual Bitcoin and be able to swap it seamlessly with mint layer, right? And so it goes on to say that we leverage technologically advanced scalability to enforce network and user security, increase node inclusivity, and ensure long-term sustainability, right? And so, like I said, they have the tokenization ecosystem. They're also going to have decentralized finance, borrowing, lending, real-world assets. That's another thing that they're big into too as well. So it will be very lucrative for institutions to look into this project, something like this, and to invest in it, right? Because this is where the exponential rate of returns are going to be. I don't think they're going to come to Bitcoin anymore. I actually have an interesting theory that I think in the next 3 to 5 years, we'll see Bitcoin slow down steadily with its compound annual growth rate. I think it won't be as high. I think there will be significant diminishing returns over the course of time. But I think where the bigger gains will be in the Bitcoin ecosystem, right? So people building decentralized finance on top of Bitcoin, and people building new real world asset tools and utility to help make things more efficient, right, for the entire ecosystem of finance. And so when you see, they also are going to have two-way pegged that allows currencies from various blockchains to interact on a single protocol, right? So this is also huge too as well. And currently right now they have their wallet out, and like I said, the mainnet is dropping out. I've tested the wallet, and it works pretty good for the web browser. In terms of the phone app, I don't think that's currently out right now, according to Enrico, right? So you can discover all these different elements of mint layer. Like I said, I don't want to break it down too much for this particular podcast, otherwise it would take way too long, and I don't want to do a 3-hour podcast. You guys would fall asleep, right? So I like to keep things to about an hour, and yeah, but definitely something to investigate. It's mintlayer.org, right? Mintlayer.org, right? And yeah, it's definitely a project to really, really look into. I am invested in this project too as well, just for full disclosure, right? Just want to show you guys how I'm looking at the market, because yeah, Bitcoin's going to make about another 3x from here, maybe a 4x from here, maybe even higher, right? Maybe at max, maybe a 5x, right? But what about the ecosystem, right? That's where I think that's where you get your 50x's, your 100x's. This project is already up about 40x from the lows, right, in a 3-month time span. So I think it has a lot of room left to run. And it's definitely something that you want to keep in mind and look into, right? Now for the next project, we have Stacks, right? So Stacks is another competitor to Mint Layer, right? And they are basically building another layer 2 on top of Bitcoin. The difference is, like with Stacks and with Mint Layer, right, is a couple things. One is that you're not going to be able to natively use your Bitcoin, meaning that you would have to use a derivative of Bitcoin. As you see here, S Bitcoin will allow the Stacks layer to unlock 500 billion in Bitcoin capital, bringing the largest, most durable decentralized asset to more people and more use cases. So that means you'll be basically participating in their network using a derivative of the Bitcoin, which is very, very not as safe, not as secure, and not as liquid, right? That's another thing, because you're not using the actual native Bitcoin as BTC. We don't know how much liquidity is actually in this, right? But with Stacks, they're also pretty cool because they're farther ahead than, I'm going to mention the third project too as well, so I can tell you guys how much farther ahead they are than Mint Layer and then Portal, which we'll get to in a little bit. But you can earn Bitcoin by participating in consensus, right? So you can hold in temporary lock Stacks and then Stacks native currency and support the network security and consensus. Over 2,000 Bitcoin have been distributed in the consensus rewards, right? So they do offer some form of consensus, right? So you can earn rewards, and that's also good as well. So I guess you stake and you lock up your value here, and you're able to get SBTC, right? And you can build powerful apps and secured by the Bitcoin, obviously. So you can become a developer and build on top of Stacks, and then you can just see a little bit of their ecosystem, right? So these are the plays that you can maybe look into to see how far in development they are, right? One of them that I'm really, really keen on is Alex Labs, right? I really like Alex Labs a lot, and they actually have a fully functioning ecosystem, right? Their ecosystem actually works. Let's see here if we can look at the launch apps of Alex Labs, right? So blah blah. Except so you can see here they already have a fully functioning DEX that works, right? You can download a Hero wallet and be able to participate in their network, right? If you look at the wallet managers, you can see basically all the different. You can get a Unisat wallet. Oh, I guess they used to have a Hero wallet. Maybe they rebranded. But they also have. You see it on the Bitcoin chain. You know, they have the Uniswap. You have BitGet, OKX, and here Xverse, and different types of wallets that you can download basically to be able to participate in the network. And you can look at their pools, and you can see in their pools, you know, they have the derivative of Bitcoin. So they have BTC, and you can see the liquidity. So you need to be careful because there's not a lot of liquidity here, right? 20,000 is not a lot. 100,000 in terms of liquidity. This is the volume is around 20 to 30 to 40,000 in a lot of these pools, right? And so you can see the full amount of liquidity in these pools is not a lot. There is a lot in stacks in BTC. So that's something to keep in mind. They do have a launch pad too as well. They have an entire DeFi ecosystem built on top of Bitcoin, right? So this is definitely something that you can check out too as well. So I really like Alex Labs and what they're doing, and they're already out and developed. Same with Stacks. And this, I guess, I would say their competitive advantage is that these projects are already out. And the thing is, what I would say is that in crypto, a lot of times the newer projects do better than the older ones because people in crypto like to chase a new shiny object, you know, like, oh, I missed out on this, so let me get into this. I missed out on that, let me get into that. So Stacks is performing really well this bull cycle. I think it's up like a 7x, right? And I think the same with Alex Labs. They're up about both like 7x, but they're still very early, and I think that there's a lot of more room to run. I think Stacks, I think it's currently right now the market cap of Stacks is currently like, we can check real quick in coinmarket.com just to see and check the because I don't want to, you know, give you guys the wrong kind of information. So when we look at CoinMarketCap says that it's about 2.4 billion market capitalization, right? So when we scroll down and we can look and take a look at you know, the total supply, right, is roughly 1.8 billion. So it's really good. So almost 80% has been unlocked, which is also a really good sign. 300 million in terms of transactional volume, right? Which is also another really, really good sign as well. And you could see the all-time high was around $3.61. So will it pass its all-time high this cycle? I think it will crush it. It will go way past its previous all-time high. And I could see this project doing another 10x from here. I mean, you're talking about the layer 2 scaling solution on top of Bitcoin. But the reason that I don't buy Stacks and why I like mint layer more is for the two reasons that I kind of told you, is because you're able to use native Bitcoin, right? And I think that will be, well, again, this is speculation if they're able actually to achieve this, but that's what they're trying to design, right? Is a design to be able to actually use native Bitcoin. And that's one thing that I think is a differentiating factor between Stacks and mint layer. And also it's a newer coin, just got on the market. It's currently on Ethereum now, but they are going to be switching, like I said, in the mainnet to their mainnet on the 29th of January. And yeah, so, and also the real world asset sort of implementation is another play too as well. And currently right now, another thing to keep in mind is that there will be a lot of token unlocks. I think around 3 to 4% every single month of token unlocks, right? Because only 18% of all the total supply has been out in circulation, right? So that's another thing to keep in mind, the difference between Stacks and mint layer, right? Definitely both are really good projects. I just think one has a bigger upside. That's another reason why I like mint layer 2 as well, because the market cap currently right now is 61 million, right? And so if this thing 10x's, it still wouldn't even reach Stacks current market cap, right? If it does a 20x, I don't think it still wouldn't reach Stacks current market cap, right? And so a 20x from here would put it at around $16. And I think that's more than doable for mint layer, especially if they're able to, the mainnet goes well, people start building on there, it creates this network effect. I could see mint layer, I could see mint layer really doing some crazy numbers, maybe even 100x from here, like a $6 billion market cap. That could be a potential possibility in the most bullish case scenario, which would make a lot of people millionaires. I think if you're buying in this range here, but below $1, and if you're putting a significant amount of liquidity in, and if you put 5-10K in, this thing could run up quite a lot. It's ran up a lot already within the last few months, right? So you see this thing was just quiet, trading in this range, and it started pumping, right? And then start going up, and I think right now it's just in a consolidation stage as we kind of have a little bit more of uncertainty, because after the ETFs now, there needs to be a little bit more of a catalyst to push the market and drive it forward, which the two catalysts that are left remaining right now are the Bitcoin ETFs, or not the Bitcoin ETF, sorry, the Bitcoin halving and the Fed reversal, right? So we're waiting on those two events to happen, plus the elections too as well, to help serve as more catalyst to add more liquidity within the markets. And the final project that I really want to show you guys is Portal. So this project I also invested in as an early stage investor. If you guys like or want to get access to that too as well, please reach out to me by email or through booking a appointment on my Calendly. And like I will tell you guys up front, it does cost to be able to get access to these sort of things. But yeah, I'm an early investor in here too as well, and this is planned to launch sometime this year. And so Stacks is enabling fast and low cost economic activity across chains without trusted third parties for humans as well as agents, right? AI agents, right? So the global financial computer, blah, blah, blah. So they talk about the AI Gent protocol, the future of autonomous AI Gent, coordination of incentivization where AI Gents converse, negotiate, and exchange on their behalf. So they're building a DEX, they're building a swap SDK too as well. You're going to be able to swap BRC20 tokens with Bitcoin and Bitcoin into BRC20 tokens. And they're making a gold standard multi-currency wallet with built-in cross-chain DEX, right? So I like this project too as well. They've been in development for a while. They've already got their raises in. They have the strategic partners, OKX. You see a couple OIG, NGC Capital, Monday Capital, and so on and so forth. And you see they have different publications here that you can check and look into too as well. You can follow them on their Twitter and Telegram for more development on them. So I don't know exactly when they're launching. They're obviously not raising any more capital, and they're just in the building phase. And they're the earliest stage project out of the three. Mint Layer already has a token launched on Ethereum, and again is swapping to the mainnet on the 29th of January. Portal is basically at the ideal stage of building, and then they'll eventually get, or I think they have a test net out, but you guys can double check by checking in their Telegram to see how the test net, if it's open to the public. I don't know if it's an open beta or it's a closed beta, but you'd have to check and see. And they're just a little bit earlier. Their token isn't launched yet, whereas Mint Layer's token is launched, and they're a little bit farther in development, and Stacks is already kind of refined and ready to go. So these are the three projects basically that I'm looking at, and trying to see how I can get me and also my clients another exponential rate of return from looking at these plays and seeing that the fact that the liquidity will trickle down into the Bitcoin ecosystem, because it's inevitable, because Bitcoin layer 1 can't scale to the degree that we need it to, because it's just, when there's too much demand, it gets expensive to transact and also is slow, right? And so these are problems that will occur. So it's not good to build DeFi on the base layer. Everything will have to go layer 2 and eventually layer 3, in my opinion. And it'll need to be multiple layer 2s to help streamline this process, right? So yeah, and the final thing too that I wanted to point out is I also wanted to talk a bit about the idea that there will be more ETFs, right? People think this is the be all end all, right? So Bitcoin ETF was just the beginning. Soon there will be a ETH ETF, right? I'm not entirely sure if BlackRock already applied or they're thinking about applying, because I didn't do enough research on that. But You guys can go check and see that for yourself, but they're already talking about the ETH ETF, right? And I talked about this 6 months ago on another podcast, or 6 or 7 months ago, where I said that the ETH ETF would be next, right? Now what I'm thinking is, after the ETH ETF, I think the next major player would more than likely be Solana, right? And the reason I think Solana would be third is because I think Solana right now has a lot of hype, a lot of narrative, a lot of people shilling it, and I think it's going to flip Binance Smart Chain and become the third most prominent blockchain. And it's faster, it's cheaper, even though it's not as decentralized. In crypto, people I know have the decentralization ethos. I used to be the same as well. I was a decentralized advocate, and I still am. But I also want to make money, right? So decentralization is not the thing and the unique selling point that always helps pump your bags. Sometimes it's just venture capital, better marketing, better positioning, better branding, and better usability for the end user. And that's what Solana has. And so this is why I think, with all those things I just mentioned, that Solana would probably be the third ETF to be approved within the same cycle. And that's what I'm anticipating, right? So it may, if you wanted to trade this market or swing trade it, which I wouldn't suggest, because first of all, I'm not a financial advisor. I'm a technological informative, is what I like to call myself. So what I would do if I was a trader, though, is I would liquidate, if I had a large Bitcoin hold, I would liquidate a portion of my Bitcoin, put it into ETH strategically, in the case of the event that the ETH ETF then get approved. And then I would then trickle that money down then to Solana. And that is how I would play it if I was trading this market, right? And I think you could make, a significant amount of returns doing that. I don't suggest to do that personally unless you're a professional. It's just an idea of where I think the liquidity is going to go. And that's more so what I'm trying to allude to here. And so this is basically all the things that I anticipate moving forward with, the Bitcoin ETFs and everything I see that will happen. I hope this podcast was informative for you guys, and I hope you guys stay tuned for the next one, man. And peace.